So why have house prices not crashed yet? Which is a question a lot of experts have been pondering over the last few years. Well, in this video, I answer that by taking you through the latest Housing Insight report that I'll link in the description below. And it does a great job of taking us through the data and sharing the fundamentals of what is underpinning the property market right now. So let's get into it. What is the economic outlook right now? The Bank of England base rate is now pushing downwards year on year, and it's now at 4.75%. The next interest rate announcement is Thursday, February the 6th. So put that in your calendar, and it is generally broadly expected interest rates will reduce over this year, over 2025, especially given inflation unexpectedly dipped end of last year. And this is something households especially need right now, given CPIH, which is inflation including the cost of housing, has increased 7.8% over the last year. So although inflation is down to 2.6%, when you package in housing costs, inflation has actually still been increasing the last 12 months by a lot. You bolt to this, GDP has slightly decreased. It certainly paints a picture that the economy, households are still under a lot of pressure in general. And as a result, UK house prices have remained broadly static. Yes, they've been increasing a little across all four nations, as you can see from this graph, but it isn't significant, and adjusted for inflation, house prices are pretty flat. However, sales volumes have been increasing. So as you can see here, property sales data is a lagging measure because properties completed within a month, this month for instance, will represent sales negotiated and agreed months earlier. But it's interesting to see that the latest available data is showing a 23% increase in completed sales transactions in the month of October. It paints this picture that despite the still very tough economic climate, demand for property is climbing, and that is proving reflective in the buyer demand data as well. You can see the number of buyer registrations per branch has been clearly increasing. And if you don't know me and my background, I'm Will Gale, and over a decade ago I set up a UK-wide home buying company, British Home Buyers, a nationwide estate agency, British Home Sellers, that I run to this day. And we deal with thousands of properties a year, and over Q4 last year we actually experienced an over doubling of properties sold against the year before. So certainly from where I'm sat, the market is really picking up, and that is most likely contributing to why the market hasn't crashed the way experts worried would when interest rates started to go up. So far this year, the market's picked up even more, just as a side point. Gross mortgage advances are increasing quarter by quarter at the moment, as you can see here. But the real difficulty in all of this is I'm definitely noticing a wide inequality in the market at the moment, because as you can see, the data is showing us that demand for property is increasing. But at the same time, affordability for a big portion of the market is still a significant issue. 30% of adults reported finding it very or somewhat difficult to afford their rent or mortgage payments at the moment, which I honestly find quite horrifying that in the United Kingdom, there are so many of us struggling. Now, the slight silver lining is that this same stat a year ago was sat at 35%. So it does appear things are improving slightly, but still there has to be something wrong with the system we operate in, the game we're all playing, if that many of us in society are struggling. Comment below what you think. It's a real issue. And so look, based on that, it probably no surprise to you that you can see here mortgage arrears have been increasing through last year. Looking at this, you'd assume that more people struggling and more people in arrears would lead to a great supply of property entering the market, but that hasn't actually really been the case. Actually, supply has dropped ever so slightly, and when you look at the total stock levels estate agents have on the market at the moment, you can see from this graph the volume of property on the market per branch has dipped slightly. But it's worth pointing out, you can see it's still broadly higher than we saw in 2022, 2023, and through last year. To compare, there's literally about 50% more property on the market now than there was at the close of 2022. So in conclusion, house prices have risen slightly. 30% of households are finding it very or somewhat difficult to afford their rent or mortgage. Inflation is edging downwards, but CPIH is still 7.8%, so that's inflation including mortgage and rental costs. Interest rates are edging downwards, transaction volumes have been increasing, and the supply of property coming to the market is static. So based on those 7 things, I'm not expecting house prices to explode this year, but it's hard to imagine house prices dropping looking at that cocktail of 7 statistics. The thing the government can really control at the moment that could affect all this is the demand from the buy-to-let sector. The percentage of buy-to-let purchases was tracking at about 1 in 10 purchases last year, which is pretty low. It's usually about 20%. All this before the second home stamp duty increased from 3% to 5%. So in a way, if all of a sudden we find only 1 in 20 purchases are buy-to-let this year, that is going to help reduce the demand from investors, whilst the demand from day-to-day buyers increases on the back of lower interest rates. It's going to be quite a delicate balance. And remember, this is a double-edged sword, because then how does a reduction in buy-to-let properties then impact the rental sector? At the moment, rents are increasing faster than the increase in house prices, which is what is creating an even bigger want from tenants to become homeowners. And demand for renting is still outpacing the supply of rental properties on the market. This graph shows the average number of applicants for each rental property on average. And yes, the average has dropped to 7 people for each property on the market for rent, from the heights of almost double that. But clearly there is still a problem. And a common thing I'm hearing landlords say that are looking to sell their properties with me at the moment is if they can't sell at the price they want, then they'll just keep the property because the rental market is so strong. Why sell it if you could sell it in a year or 2 at a better price? And a key reason we're finding more cash-rich investors are buying property through us at the moment is for exactly that same reason. The rental market is so strong, there's so much demand, and yields and capital appreciation are still pretty good if you're less reliant on needing big mortgages on what you're buying. Anyway, what do you think, guys? Do you think the market's going to crash? As you can see, I make an effort to reply to all your comments, and if you've enjoyed this, why not watch the next video up here?